Good morning. I hope you're doing well, and welcome to today's live coverage of the UK unemployment rate. We're going to take a look at the numbers as they're published. I'm sitting here with the Reuters platforms next to me, and we're also going to take a look at the pound dollar, see how it reacts, and also to see how the euro pound reacts to the figures. We're of course also going to provide you guys with interactive and live technical analysis to give you an idea of the numbers, how they're affecting the price action, and if we're taking out certain levels, what could be the next levels that traders could be targeting, and so on and so on. Now, before we start, as always, we need to understand that trading financial markets is unfortunately risky, and there's a genuine risk that you lose more than your invested money. The reason for this is that most traders, when they trade Forex, actually trade with leverage, right? So because of that, there's a genuine risk that we lose a bit more than deposited. That is, of course, if you trade with huge amount of leverage, which obviously I hope that you're clever enough not to do that. And we'll begin now in the live trading room right now. If you have questions, you need to log into a YouTube account and just write to us to ask questions. I'm also live on Periscope, and I'm also live on Twitter. And what we'll do is that we're gonna look at the questions as soon as we provide you with the first introduction to what we're gonna be doing today and the technical analysis. Uh, Otherwise, as well, guys, just welcome to trading or tradecaptain.com. Now, this is just the pound versus the USD, and the market heading into the event is trading sideways between 130.23 and 133.26. And we also have a narrower range, which is the 130.23 level and 132.29. And this is what we're working with. And ideally, we work with the big range. So if you think about it, if the numbers are better, and what are better numbers then? Well, lower unemployment rate, higher wage growth. So if there's more employed people in the UK, and the people that are employed are making more money, then that would be an indication that the UK economy in general is doing better. So that tends to boost the pound. On the other hand, if the unemployment rate goes up a bit and people are not making as money as was anticipated, well, then the pound would weaken a bit. And the idea is, ideally, we have the data matching price, which is what we're looking at right here, right now. So if we just think about it, if the numbers are bad, then we would potentially, not necessarily today, it all depends on how bad the numbers are, but if they were bad, then we could potentially take out the 130.23 level. And usually when you take out the low like this one, the market tries to reach the next support level, which is down here. The alternative would be if the numbers are really good. And if the numbers are really good, then we might actually break the upside and could potentially target this level here. Because when you get one high, the market tends to trade the next higher. Now, there are some problems with a bullish breakout, and that is that we're just going to break out of this little range which dominated over the last few days, and we would still be trapped within the bigger picture range. So my preference is that ideally we take out this high. Now, with the economic data, sometimes we can override that. So if the numbers are really, really strong, then yes, we could potentially just go long on the break to the upside. And if they're a bit mixed, we just wait for the range to break. And again, if they're really bad, we just take out the low. Then it's very straightforward here as well. So what are the numbers that the market is looking for? So here's a little bit of a print screen. So the first things first, you can see here that there are surveys. So this is what economists anticipate will happen. So they asked economists, and they think that the unemployment rate will remain unchanged at 4.3%. So if it goes down to 4.2, 4.1, then that's good. If it goes up to 4.4, 4.5, then that's not that good. But at the end of the day, it's overall a very good number. So I think the focus is going to be on this. Average weekly earnings with bonuses. if it the market anticipates, economists anticipate that this increase with 2.1% since last year, and without bonuses 2.2% since last year. And here it's very straightforward. If this is 2.3, this is maybe 2.4, 2.5, then that would be an indication that this is actually really good and potentially see some stronger pound. Now this we need to relate. So yesterday's number showed inflation was pretty much at 3%, and right now if this prints 2.1, then that means that people are making 2.1% more money since last year. However, if inflation has risen with 3%, then they're still losing 0.9%. So ideally what the market wants to see, they want to see this gain more, so this loss here in money becomes smaller and smaller. And this is the pound dollar. Now let's take a look. See, the numbers should be out any minute now. Actually 40 seconds left until the data is out. What we'll do next is that I'm going to see if I can load the euro pound. So this is the euro pound, and the euro pound here is also stuck in a range, and this is just an old setup that we're not going to focus on just now. So this is the euro pound. Now here, unfortunately, also stuck in a big range. This is 87.33, bearish here, and on a break to 90.31, bullish. Now, as you saw, I had a little line here, and that is an idea I floated a few days ago for people that are really interested and really think that the pound is gonna strengthen in the future. Okay, so the numbers are out, and the average earnings increased with 2.2. That's better, excluding bonuses as anticipated. And then you have the unemployment rate at 4.3. So the numbers are slightly better than expected. So slightly better than expected. And let me show you how that exactly looked like. So here is the here's the actual 2.2 gain. So see, the actual was 2.2. That's average weekly earnings. So slightly better. That's good. And then you have with bonuses that just met expectations. On the other hand, this number was revised higher, so it was re-estimated to 2.2. So that's good. What does this mean? Well, the prior number heading into the event, we thought that the last month's reading was a 2.1, but in fact it was 2.2. Here again, with bonuses, we thought heading into the event that it was at 2.2 last month, but it's actually 2.3. So here we have a beat plus a revision to the upside. Here we just have a revision to the upside, but we actually just met expectations. If you look at the unemployment rate, it's at 4.3. So overall, we're looking at a good number, and it's not good enough though to necessarily cause traders to be extremely bullish and optimistic here and go long this market in a major way. And that is why we're having this relatively muted reaction. But the numbers were good. And in the case of the euro pound, because we've risen to the high now over the last day or two, we might see this potentially seeing some profit taking here if people are long, and could potentially look to roll over. But I'm gonna be 100% honest with you, I don't like to trade these sort of ranges, so my preference is to sell here at 87.33 for this to go down to 83.79. The alternative is that we, if you're very bearish, then some traders are probably selling here with stop losses on the other side. Now, why would they be really bearish? Well, because Bank of England increased interest rates, and they might increase interest rates maybe 2 more times in the next 1.5 years. On the other hand, the Eurozone and the ECB, they're doing great right now, but they're just reducing quantitative tightening, reducing quantitative easing. And at the last meeting, in essence, they told us that quantitative Easing is going to be in place for 3 months longer than people anticipated, so it'll be September next year. And they're also open-minded. So if inflation does not reach its target, might keep uh, quantitative easing for longer. So that is an idea for people that are really optimistic on the pound. Then people selling here, stop loss on the other side, and then a break to the downside. Here, if you're trading the pound, the numbers were good, so I do suspect this is gonna push a little bit higher, maybe take out this high. But because the overall market is range bound, it's fortunately not probably the best idea to work with. But I think it could potentially head a little bit higher. But again, I wouldn't really trade that to be really, you know, for me to really anticipate much stronger gains. I think we need to take out the 33.26 level, which is up here. And that, guys, provides you guys with a quick little overview of the unemployment numbers and as well the different scenarios in the market that we're dealing with right now. So what we're gonna do now is gonna see if we have any questions. We have Noor Mustafa with us today. Good day to you, sir. And we have Lawrence Green as well here. Good morning to you. So thank you so much for joining me. If you have any questions, just pop it in the chat box. If you want me to take a look at any other markets or want me to, uh, you know, answer anything trading related. As well, we're live on Periscope. So I'm gonna see here if we have any questions here as well.